for somebody who hasn't been, in the space, is not a real estate investor, but is benefiting from their company going public, is like, I'd be worried a little bit that I was going to buy this thing and I had one tenant that was paying me a lot of rent. Um, Talk a little bit how we try to go about preserving capital, what we try to focus on for these people, and the investors that, I mean, they've made the money. Our primary objective is they don't have to make it again. They maintain it and get bunch of great benefits. But how do we reduce the risk of tenant going dark?
So let's just talk about Starbucks, for example. You're buying Starbucks as your guarantor on your lease, right? And so in theory, even if they decide to go dark at your property, and what we say by going dark is they open for business, they're operating, they decide that it's not making the profit that they want and they want to stop operating daily business at the property. That doesn't mean that the rent's not owed. And we have seen, not necessarily in situations with our clients, but in situations where you guys are helping someone sell a different net lease property that's not in an OZ, where the tenant went dark, the tenant's still paying the rent. And then what we've tried to do is negotiate a lease buyout with them, and especially when we have a new tenant in hand, so that we're actually trying to turn this into a way to make extra capital. But just because the tenant goes dark doesn't mean that they're going to go, stop paying rent. The other thing is, most of these big corporate credit tenants that we're buying have a team of people. So think of, there's a team of welders at SpaceX. Well, these people have a team, 35 to 50 to 100 people in-house, whose jobs are just to identify the next locations. So they've been doing this every day for 20 plus years. They know their metrics. They know what they're looking for. It reminds me of, there was a Starbucks that we looked at for a client in Missouri, and there was three things in it. There was a restaurant in the shopping center, a Walmart, and a Starbucks. And it was kind of in the middle of nowhere. And so it was trading at a higher rate of return, but still a Starbucks lease guaranteed by Starbucks. But when most people, if you, again, to the point of driving the real estate and doing the research, it was the Walmart that serviced a college town 25 minutes to the south, and the next major town around, which was 30 minutes to the north. So Walmart decided that they were going to invest into an area and build something that was around, technically not a lot, and for 20 minutes in each direction, but 30 minutes in each direction. There was a major city on one side and a major college campus on the other side, and that's where they decided to put it. I would tell you that I would be happy to own that Starbucks.